Good day traders, this is Stefanos on behalf of Tixee. In today's video we're going to be covering a weekly outlook which is for next week starting 10th of January until the 14th. Now before we actually get going, what's pretty good to do at the start of every outlook is just to go over what happened last week. Why? Because obviously looking at what happened last week can set us up for some market opportunities that are going to be taking place next week. Now, I'm sure most of you are aware, but if not, on the first Friday of each month, we have the non-farm payroll report. Now, what this report says, it basically shows us how many jobs were created in the US over the period of the previous month. Now, in January, if we go at the economic calendar, which by the way, you can very easily find on Tixee's website, all you need to do is, once you go to the homepage, you have these couple of tabs up here. All you need to do is just click on the Education and Research tab and then on the Economic Calendar, and you'll be brought to this page here. What I like to do is to filter by the high impact events, because these are obviously the ones that are going to be causing the most volatility in the market. So it's obviously good to have those in your view. Now, I've obviously filtered this already for last Friday, which was the 7th of January. Looking at the time, it's set to the London time zone, so it's GMT +0. And if we look here, you can see the non-farm payroll report for the month of December. Now, the column you actually want to focus on is this one right here with the forecast and actual figures. If we look at the top, this was the forecast figure right here, which was 425,000. Now, the actual figure came in at 199,000, which is less than half. Now, obviously, this how impacts the currency is negatively, and which is why, if for example we look at the euro dollar, we can see this is a daily time frame. On Friday, which was the 7th, the price pushed strongly higher. If I want to measure this was around about 68 to like 70 pips. So it created a couple of market opportunities to take advantage of, since 70 pips is quite enough. It's quite a decent range to work with on any given day. So looking into this currency pair and looking into next week, what I am expecting, what my bias is that we can continue pushing further higher, because obviously the number was a very big deviation from the actual forecast figure, which is why I expect some further weakness with regards to the dollar for the rest of next week. So if I also switch, I can switch to the weekly time frame to gain an idea of the even bigger picture. And sometimes what I like doing further is just to switch to a line chart like I do here, because it basically it excludes all of the wicks, so I can get a clearer picture of what the price is doing, since I'm just looking from closing price to closing price. So here we can see that price broke above this swing low here. It broke above and it's now retesting it. So what I'm expecting is just some further upside with regards to the currency, meaning that it's going to be weakness for the US dollar and strength for the euro. And if we look at the chart, there's also a pretty nice little zone here that I can just plot on the chart, which I can basically just use as the target if I intend to take this as a buying opportunity. Further to that, there's also, we can see here the candlestick pattern, which is a hammer candle. Now, for those who don't know the hammer candle, if you spot this candle at the end of a downtrend, it can signify some upside that's going to be coming very soon. And we didn't just have one, we also had another one right here. So if I look at this one and this one, you can see that sellers tried to push the prices lower, but they failed to do so. Buyers came in and they pushed the price further higher, closing at the top middle of the candlestick wick itself. And so since we had this close, it can just suggest that we're going to be seeing more upside towards the rest of next week. Now, this doesn't necessarily mean we're going to get a move that's going to just shoot straight up into this area. Price can of course consolidate here, it can move a little lower before it intends to go even higher. So we'll just gauge with regards to what's going to be happening at the open on Monday to see what the overall sentiment is with regards to that, and see how we can position ourselves in the market. Now, obviously it's not just the euro US dollar you can keep an eye on, any currencies that are related to the US dollar. So you have the major ones, which are basically the pound dollar, New Zealand dollar, US dollar, the Australian dollar, and the Swiss franc as well. So you can create your own watch list. You can do it either on tixee or on any other charting software you like using. Obviously filter them here as just the major ones. So if for example, I switch to the pound dollar, you're gonna see similar behavior in that on Friday, prices push higher because obviously you had that strong negative result with regards to the non-farm payrolls. If I look at the US dollar, Swiss franc, similar situation. Australian dollar, US dollar, again the same. New Zealand. So you can see overall currencies pushed against the US dollar since it had that negative figure on Friday. Now looking ahead, because we're going to have next, we have some other strong impact events. So going to be having inflation data. So the US CPI figure, which could break above 7%. So I can just switch this also to next week so you can get an idea. So here I've just changed the date, so we're looking from the 10th of January until the 16th, which is going to be end of next week. And again, I'm just filtering the data by the high impact events. So you can see on Monday we have the unemployment rate for the European Union, which again, it's a pretty important figure because it obviously affects one of the other major currencies, which is the euro. We have the balance of trade for the Australian dollar. And then on the 12th of January, this is when the CPI figures come into place, both for China and the US as well. Again, the times here, they're all in GMT time, GMT UK, so you can obviously just change it and switch it up according to what time zone you're in. We have balance on trade for the Great British Pound as well. GDP growth for Germany, which again, it's a pretty important figure since it's going to be heavily affecting the euro as well. And ending on Friday with the retail sales figure for the US dollar. So we can see these are quite a number of events that can affect the market strongly, and which obviously can create market opportunities to take advantage of as well. Aside from that, because this is obviously just covering currencies, so we're looking at Forex. So we don't just want to, keep on looking at Forex because there's obviously other asset classes that we can look into as well. One of the other major ones being stocks. We have the earnings season kicking off next week. The earnings season, so it's just going to cover the end of last year. So it's going to be the Q4 of 2021. And usually with the earnings seasons, when they start kicking off, we start looking at the major banks who start reporting figures first. And two of the major banks are going to be reporting figures, and which would be a good idea to keep an eye on. One of them is Citigroup, and the other one is JP Morgan. Now, just like with the economic calendar, you're going to be having forecast figures with regards to the earnings, what the expected earnings report is going to be for both of those stocks, and you can just then compare the actual figures and what impact that is going to have to the prices of those stocks. So this is with regards to the asset class of stocks. And lastly, looking at cryptocurrencies. If I just switch back, we can just go and have a look at Bitcoin. Let me just switch this. So if I just look at the Bitcoin US dollar, we can see that we had a pretty strong sell-off since we reached the all-time high of close to $70,000. And ever since, we've just been selling off and basically now down to $40,000. Now, since we had the Fed also talking about the interest rate hike cycle, which is basically when they come in and meet and discuss whether they want to increase the interest rates. So if they actually intend to do that, it could just drive investors outside of cryptocurrencies and back into stocks. And what this means is that we could just see a further sell-off with regards to cryptocurrencies and Bitcoin more specifically. Now, if we're just looking at this purely from a technical standpoint, we have some levels here, some structural levels here where the price could bounce off of, but we can see the sell-off was quite strong. So in my opinion, I would be looking more into this region. Now, it doesn't mean that it's going to break below this region, just continue moving lower. You could just find support here and start moving higher. But until that, this level is reached, I'm going to be more or less biased towards the sell side with regards to cryptocurrencies. Now, looking into commodities as well, one of the important events to look out for is obviously the US crude oil inventories, which come out on a Wednesday. And just like with the rest of the figures, you're going to get a forecast and actual figure as well, which can indicate what movement could be taking place for that specific asset class. So yeah, this is pretty much all that has to do with regards to the next week. Again, starting January 10th until the 14th. There's quite a few number of events like we spoke about to keep an eye on. Obviously, you don't need to look at all of them. You can just focus on one of them, the one that you prefer and you feel most comfortable trading with. And yeah, I wish you all a good trading week for the next week, and I'll catch you guys on the next one. Until then, take care.